Hello and welcome to CMS Forex Daily Video Recap. I'm your fundamental market analyst, Nick Nassar. Today is Tuesday, September 28, 2010. The dollar fell broadly today as disappointing U.S. data sparked a fresh round of speculation that the Federal Reserve could soon embark on a stimulus plan to kickstart a flagging economy. The U.S. consumer confidence from the conference board fell sharply in September as consumers saw no improvement in the labor market, according to the report. U.S. consumer confidence fell sharply in September as consumers saw no improvement in the labor market, according to the conference board. Its index of consumer confidence fell to 48.5 this month from a revised 53.2 in August, which was first reported as 53.5. The September reading was far worse than the 52 expected by economists, and it's the lowest reading since February of 2010. As you can see, the present situation index dropped modestly while future expectations dropped by a much further degree. Let's take a look at the euro-dollar pair, where we saw it sliding a bit overnight, again on some worries about sovereign debt from the eurozone, but after testing the 1.34 area, we see it rallying and then surging higher, moving past the 1.35 level, our level of resistance from yesterday's session, following the consumer confidence report. We reached a high just below the 1.36 area and the rally stalled there. Today's data makes the case for more quantitative easing by the Federal Reserve, which as we know has been putting the greenback on the defensive over the past 2 weeks. While yesterday there was some talk and speculation that asset purchases by the Fed may be small, a bolder approach may be needed to stimulate growth. The ICE dollar index, meanwhile, which tracks the greenback against a trade-weighted basket of currencies, dropped to its lowest level since February as investors ditched the dollar. The dollar fell against the yen today, dropping to its lowest level against the Japanese currency since Japan's massive mid-September intervention in currency markets in order to stem the yen strength, which we saw back here. The drop put investors on high alert for signs of Japan re-entering markets in order to prop the dollar, but analysts said that there was no sign of the hand of Japan just yet. Investors do remain on alert, especially as the September 30th halfway point for Japan's fiscal year looms, with Japanese companies likely to be repatriating funds during that time. That will work to strengthen the yen as these companies buy the yen, and that could mean the pair continues to slide further. How low will the pair go before we see some intervention? It's a bit of a guessing game at this point, but we have to be cognizant of the 83 level where the Bank of Japan initially intervened. So we'll see if we approach that level in the following trading sessions. Taking a look at the US dollar against the Swiss franc, we see that the franc strengthened to a record high against the dollar for the second time in 5 days following the weak US consumer confidence report. That stoked demand for the Swiss currency as a safe haven. The Swissy is the perfect alternative for someone who wants to exit the dollar and does not want to go into the euro with all its periphery problems and event risk. Investors traditionally buy the franc during times of economic turmoil because of the perceived stability of Switzerland's economy and its current account surplus. And if we zoom out to a daily time frame, we could see that it has been steadily gaining on the dollar since about the middle of June. After breaking parity in last week's trading and consolidating over the past 3 sessions, we see the pair breaking below its recent lows at around 0.9780. While the dollar was broadly weaker, we did see the UK pound drop sharply in overnight trading and in the New York session before regaining some of its poise against the dollar after Bank of England Monetary Policy Committee member Adam Posen's comments that he sees a clear case for undertaking more asset purchases in the UK to avoid a Japan-style protracted period of economic underperformance. The pair retested its old level of resistance from last week at the 1.5715 area as support in today's trading. So we'll see if that support level holds throughout the rest of the week. Finally, the US dollar Canadian dollar extended its move in favor of the greenback in overnight trading, testing our resistance level around 1.0350 and then testing it again a second time in today's trading before moving back in favor of the Canadian dollar, as we did have US stocks manage to rally in afternoon trading, which may have reduced some of the risk aversion that we had seen in this pair. We see it coming to support around the 200 period moving average, the 1.03 area. Now we see that this pair continues to bounce between resistance and support in a pretty well-defined trading range that we have seen over the past few weeks. We have some pretty clear levels of support at 1.0215 as well as the 1.0350 level that we mentioned just now. Looking at the upcoming fundamental docket, first we have New Zealand posting its trade balance at 5:45 p.m. That's followed by the Japanese Tenkan Manufacturing Index survey, the Australian Leading Index, and Australian measure of new home sales. Overnight, the UK has 3 releases: net consumer lending, mortgage approvals, as well as index of services. Tomorrow, the fundamental docket is rather light in the North American session, with Canadian Producer Price Index being the only key release. And that will do it for today's video recap. For more news, videos, and analysis, please visit our site cmsfx.com. I want to thank you for watching and wish you good trading.